Hello and welcome back to FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have a economic shipper update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hello and welcome to your Wednesday Carrier Update. I'm Zach Strickland, presented by PowerFleet. Of course, it's been a little bit. So looking at our tender rejection rates throughout the United States right now, we've got a steady increasing climb of outbound tender rejections. Here in the blue line here, you see there back in March, we had that wave, dove all the way down to under 2.5% before taking its precipitous rise into the nether regions, where we have now a 26.28% tender rejection rate. Again, it just keeps climbing. Normally we see a little bit of tightness. I've got this year-over-year seasonality chart on here, and we normally see a little bit of tightness occur around Labor Day. A lot of people taking time off, etc., getting off the road, some home time influence. You can see 2019, we saw that increase throughout August. And also in 2018, we had this bump right around Labor Day as it was on its way down. Right now, we still have this ongoing trend line of increasing tender rejection rates, occurring through. It's not a seasonal hump. It just pushed right on through Labor Day. Again, capacity continues to tighten, even without a lot of that influence coming from the holiday. So breaking it down into reefer and dry van rejection rates, we've got our reefer rejection rate here in purple, 38.39%, continues to climb. Van not taking quite as much of an upward turn as the reefer segment, 27.57% currently. But again, it's still on the rise, still pushing that rate higher. Reefer rejection starting to separate a little bit more, which we do tend to see because reefer has a little bit more volatility than the van section. So again, reefer activity starting to pick up a little bit more than van. Looking at the country on the WRI, our weighted rejection index. So we've got our top performers here on our weekly, our weighted rejection index. Harrisburg, Pennsylvania, 18.4, leading the way over there in that dark blue. Allentown, Pennsylvania, right next to it. Then you've got Grand Rapids and Joliet, Illinois, sitting right behind those. Memphis, Tennessee, and some of these lighter blue areas. Again, a normal weekly weighted rejection index rate ranges from about -5 to +5 in a stable market. Whenever you see something over that 5 or under a -5, that is a pretty strong change in tender rejections and volumes. So volumes, again, combined with this one to give those rejection rates a little bit more depth to them so you don't get stuck in those low volume markets that have high swings in volatility and rejection rate. Looking at the Harrisburg, or the Allentown market, I should say, right next to Harrisburg, we see the van rejection rates taking a sharp increase here over the last couple of days, jumping up to their highest level of the year, of course. And then you have the reefer rejection rates actually moving in the opposite direction. So reefer activity up there, not necessarily as big of a deal. You do get up there with a reefer, a piece of a reefer trailer equipment, and you can get back out you need to come back out really quickly. So carriers staying a little bit more compliant on that side. The van, however, van side, you definitely are trying to get out of the northeastern corridor so you don't get stuck there. But good news, tweener and long haul rejection rates, which does mean that there's probably a lot more freight coming back out because you don't have as much room going into the northeast. That doesn't mean that there are some of those tweener rates can go up into that northeastern corridor, which could be driving a lot of this. But long haul freight, for sure, a lot better chance of finding stuff moving out of the Allentown market, going the other direction, going back west, going south. It may not be the best market even going to the south if you're going to Florida, for instance, but still getting moving, having a lot more miles, to utilize is always a good thing, regardless of the origin. So you could have some more activity on the spot market coming out of the northeast. Real quickly, this is our truck stop van rate, all in, 7-day average for rates. Anything in green showing a weekly change, an increase, I should say. And again, Labor Day having a lot to do with this. But I wanted to point out real fast, Los Angeles to Los Angeles showing up a lot in red here, indicating that there has been a change in the Los Angeles market week over week. So spot rate activity coming down. If you looked at the weighted rejection index, that was also coming down as well. So carriers, watch out. You may not get the rate that you were getting last week out of Los Angeles. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to the Shipper Update. I'm your host, Anthony Smith, and also the lead economist here at FreightWaves. And today we're going to review the Logistics Managers Index and the PMI, the Purchasing Managers Index. So the managers indices, starting off with the PMI. The PMI is a very popular and very familiar index that's released on a monthly basis. As you know, it's a diffusion index and it's a survey that's sent out on a monthly basis. So this survey may seem like it's up in the air a little bit with some soft results, potentially, but this has very real world applications. And so what I have here in the green is the Industrial Production Index. And so the Industrial Production Index is a actual tangible result index. And so these are actual goods that have been produced. And in the purple, we have the ISM PMI. And what this shows is that there is a significant relationship between the two. So when you're looking at the PMI, there is a statistical relevance to what's actually happened in real world results. And so when you're seeing those new production numbers, there is some gravity to what it means to real world applications. And so next up within the PMI, they are broken out into different components. And so one of the components that's really struck out to me in this index update was the new orders component. We like looking at the new orders component because that shows what's going to be coming down the line soon for production. And when we can see what's coming down the line in production, that gives us a little bit of a leeway to what to expect in the overall economy. And what we can see in the orange line is that new orders are increasing at a pretty rapid rate here. And so when we can see this increasing rate for the new orders, it shows that there's going to be some upward momentum potentially for these real world applications, especially when we're looking at industrial production goods overall. Now within the index, it wasn't all positive. There are still many struggles coming around for employment. And so that was one of the things that the manufacturers noted, was that the employments are still very much down below year-ago levels even. Of course, now during this pandemic season. The other thing to note is, although this is at a 12-month or more than a 12-month, I think around a 21-month high, this does not mean that overall industrial production or overall manufacturing is at a 21-month high. When we're looking at this, is the way to read it is anything above 50 is indicative of expansion, of course. Anything below 50 is indicative of contraction. And so although it is above 50 and at a very high rate right now for new orders, 67.6, that does not mean that there are more new orders than there were, this time last year or 2 years ago. It just means that it's that much more better than the month ago. Next up, we're going to get into what's happening on the Institute of Supply Managers and what it means for flatbed, because this all has a tie to freight. And so we like to look at it on our flatbed outbound tender rejection index, which is here in green. And we can see that there is a relationship between these two. When we're looking at manufactured goods and construction goods, a lot of these things go on flatbed trailer types. And so we can see how the capacity for flatbed trailer types are reacting to these more manufactured goods coming online. And so the positive thing and the good thing that you can do with the FO-TRI is look at what's happening on a day-to-day basis and leverage that compared to some of these monthly indices. And so you can kind of get a near-term look as to what's happening right now, what's being moved on the road, what's happening with capacity with these trucks, compared to what's happening in the overall manufacturing industry. And of course, you can also factor in some construction materials in there as well. Next up, we're going to look at the LMI, the Logistics Managers Index. And so this is another significant index for logistics industry, of course, as the name presents. And what we can see here in the purple line is the LMI is at a 66.6. And so this is showing a very, very high rate. And in fact, one of the main drivers, what we'll get into here soon, that really pushed this up was transportation prices. And so we can look at the LMI. It's very much similar to the PMI, where anything above 50, expansion, anything below 50, contraction. But when we're looking at the LMI, this is an index that's put together by Arizona State University, Rochester Institute of Technology, Colorado State University, University of Reno, Nevada, and a few others. Sorry if I'm forgetting you all. But this is a very significant index that shows what's happening in the logistics industry. And as I mentioned, A lot of it is being propped up by transportation prices. We're going to jump into this a little bit more later on today with the Freightonomics podcast, so be sure to tune into that today at 2 p.m. Eastern Standard Time. And that's going to do it for this Wednesday edition of FreightWaves Now. Be sure to check out our app on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.